Hello, and welcome to Mornings with Joel, commercial real estate podcast, where we focus on rising stars and established players in commercial real estate and talk to them about how they are building legacies in today's marketplace. Welcome, and thank you all for joining the Mornings with Joel CRE podcast. We're very excited to have you here today. And we have a man who is destined to be a legend here in the Atlanta market, Al McRae, who's doing some great things with Bank of America. So welcome, Al. We're happy to have you here today.
Well, thank you, Joel. Thank you for the opportunity. Couldn't be more happy to be here with your audience, and coming behind a lot of great presentations that I've seen and that you've done. So thank you for what you're doing in the community, and I have much respect for you, brother.
Well, thank you. Thank you. I really appreciate that, man, very, very much. So for all of you who don't know, Al McRae actually is the city president, I guess that's the proper way to say it, for Atlanta with Bank of America, which is incredible. Basically, he runs Bank of America for Atlanta, and that's a huge, huge honor. Al, just because, obviously we want to encourage the next generation to step up and achieve at that high level as you have. How did you actually get here? Because it looks like you have some roots in the Atlanta marketplace.
Yeah, thank you for that. To be honest, I wish I had a story, Joel, that says I sat down when I was 10 years old and wrote out a strategy and a plan to be, the president of Bank of America one day. And I set forth in that plan and I did all the right things. I talked to all the right people. But unfortunately, that's not the case at all. I grew up in Middle Georgia, just as kind of my family was low to moderate income family. Neither one of my parents finished college. My father was in the military. So when I made the decision about going to college, it was really just one of saying, hey, this is what you do to try to, get a good job and be successful. And so I did that. And I came to Atlanta to attend Georgia State University without really any direction about what I wanted to specialize in, what I wanted to study. And then I got really acquainted to finance and what's going on in the stock market. And so I figured that would be a good way to go. And so I came out of school with a finance degree, and it was not the greatest time in the economy. And so I was fortunate that Bank of America had a program that they were launching here in Atlanta that was basically an intern, sort of rotational type program that I participated in. It gave me exposure to all different parts of the bank. And I really started to hone in an interest around just banking in general. And I still had this love and desire for what was happening in the wealth management space. And so I was fortunate that I got into a role that was as kind of an assistant, and I started to understand stocks and investing and started to get really involved with understanding financial, literacy. And I enjoyed that. It was something that I didn't necessarily grow up with, sitting at the table at the household with my parents, sketching out budgets and talking about, financial planning and long-term planning. But it was of interest to me. And so that helped feed me. And so I got into it. And quite frankly, I just put my head down. I just, kept working, got more education and designations around the field. And then I remember the point where I was asked to be in leadership. And that's where, I was the youngest in my group at the time. And I didn't know if I was ready for that. But I had a lot of great mentors and supporters and sponsors. And let me make that point. I don't think any of us achieves what we achieve as individuals without some level of support from those that are around us. And that includes folks that are in our community and outside of our community. Because if I look back on my past, it wasn't just the great Black and African American leaders or the diverse leaders that helped sponsor me and mentor me. I also had a lot of great mentors that were white females and white males and took me under their wings. And so all of that kind of just, added up to me, being asked to do more and more. And last November, the organization asked me to serve as president for the market, which is a big responsibility. But Joel, I love it. I love the job. I love the role. I go to work every day excited about it, and particularly excited about what I know we'll talk more about today, and the opportunity to represent the bank and what we do to help support this community of Atlanta that I love so dearly.
Yeah. Well, that's an incredible story. And it obviously shows that, you put your head down and got a lot of work done in order to accomplish those things. I was looking at a couple of your awards, and it mentioned U.S. Trust. And actually, that's where I started my career. Well, I don't know whether you knew that or not, but started at U.S. Trust at 45 Wall Street. So we've got that common history. But it's impressive, and it just shows that hard work can really get you there. And it's funny because I was having this conversation this morning that all people reach a level of success stand on the shoulders of others. And like you said, it doesn't have to be just one demographic. It could be any demographic that can actually help you get there. So appreciate you sharing that. Now it looks like there's a real good fit between what you're doing and what Bank of America is trying to accomplish. I read that they've committed $1.25 billion toward minority advancement and diversity, which is pretty impressive. It even includes that indigenous tribes and things of that sort, which is very impressive. Just at a high level, what exactly does this all encompass as it relates to their $1.25 billion commitment? So that's a lot of money, right? So where's it all going, and how can we get access to it ultimately?
Yeah, no, that's a great question. And so let me just kind of take a little bit of a step back and first just acknowledge that, I've been with Bank of America for 18 years. So I can truly and honestly say throughout that 18 years, there's always been a commitment to our community, to the issues around diversity, equity, and inclusion, to empowerment, understanding that there are challenges within, particularly a lot of our low to moderate income communities, our minority communities. And the bank has always had a strategy of basically investing in those communities. When I say investing, I mean, every year over $200 million of philanthropic support through our local nonprofit supporters to address a lot of issues. And so you mentioned that $1.25 billion initiative, which got a lot of headlines, obviously after the killing of George Floyd. But the truth is that we've consistently had a level of support and a contribution of support to these communities. And so those funds were specifically directed to understanding and addressing some of the very real challenges that our minority communities have, folks that sit in low and moderate income positions. First, you think about health. The coronavirus, the pandemic, exacerbated some of the issues that were already pre-existing in our communities when it comes to the disproportionate impact that certain illnesses have on folks that don't have access to healthcare or don't have access to adequate, even just a basic food supply. And so when you layer on top of that an economic outcome that the pandemic had, it kind of exacerbated those issues in our community. So the first thing we wanted to do was address the fact that we understand there's health disparities in our system and how can we play a role in that? So we'll hear more about that because that's a long-term issue, Joel. That's something that's really challenging to tackle. And particularly you think about not just to set the pandemic aside for a second, think about diabetes, cancer, heart. Those are the issues that plague our community the most.
Yeah.
And so what the organization has decided to do was allocate funding, not only funding, but also resources, our human capital, to help support those causes and working with some of the great organizations, American Heart, American Diabetes, American Cancer Society, and say, how can we play a role in these communities, particularly for those cities and those areas that these issues plague us the most. The other areas that you talked about funding, right? We think about success for our Black African American communities, our minority communities when it comes to jobs. Think about how our economy and our demographics are changing and how, a lot of the jobs of old are going away, and how do we reskill and retrain and retool the labor force to participate in that? Education plays a role in that. So, a big part of supporting education and supporting individuals that, for instance, go into HBCU. So we have within this commitment, we have a goal continuously of diversifying our internship and classes that are coming in. And a lot of those diverse individuals are coming from historically Black colleges and universities, areas where we know some of the top talent exists for our Black and African American students. Small business success, you mentioned that. So this one is big. And what I'll say is laser focused here in Atlanta. That's where I've been, is on economic mobility. And small business success is a big part of this. And we want to talk about, and we probably will get into this a little bit more with your questioning around what makes up for a successful individual. We know ownership is one of the biggest keys. Ownership of your home, ownership of your business. And so historically, that's been challenging here in our Black African American communities, and sometimes it's systematic, right? It's programmatic. It's policies that kept us from owning homes in certain areas and building equity, or policies that have kept us from access to capital for small businesses. So within that $1.25 billion commitment, there's a piece of that goes to let's help provide access to capital. So we work a lot with, we have a large investment in CDFIs, which provides a lot of that capital to those small businesses in those communities. We also directly fund here in Atlanta. We have over 6 private equity venture capital partners that we funded to provide capital that those organizations, those PE funds actually go out and look for small businesses, small minority-owned businesses, women-owned businesses. And I'm proud to say that, Atlanta is one of the top recipients of those funds, outside of New York and San Francisco. And so you look at the ground, you look at the area that we have here in Atlanta, the opportunity is ripe for business success. That's why I've dedicated myself to that. I myself am a board member for Russell Innovation Center for Entrepreneurs. And I mentioned during the pre-call that Jay Bailey is a good friend of mine and someone that I support and I believe in. And so I've myself allocated my own talents to that issue. And we've done a lot here in Atlanta outside of that. Sweet Auburn Works District, we were one of the seed funders for their accelerator fund for their small business grant program. Mm-hmm. And we continuously look for opportunities. As you mentioned, how do we get access to this capital? A lot of it is through some of our not-for-profit partners that are providing grants and loans and other accesses for those. So we can talk about this, I can talk about this for days, Joel, because the truth is that our opportunities, I would call them, some opportunities are so vast that there's so many different areas that we're trying to play a role in this community. And as I mentioned in the beginning, it gives me great pleasure to serve as kind of the head of that and sharing that with everyone out there.
Yeah. No, that's fantastic. And you mentioned 6 different private equity firms that are actually out there deploying that capital. My research was saying it's about $350 million that they have out there. Is it private equity for business? Is it for real estate? Is it, do you have any idea on what that is?
So that 350, that's that's across the country, right? So okay. What we've done is we've taken those funds and our team goes and looks for those whether it's a PE or venture capital funds that are directly targeting small and minority and female-owned businesses. The other thing I would say is that Bank of America also is helping provide direct access to capital. So you can all Google Black access to capital and women access to capital. So there's 2 directories. And to your question about the types of funds, as you know, Joel, in that world, it depends on the type of fund they're running, right? Some are focused on real estate, some are focused on business, some are focused on seed stage, Series A, Series B, Series C. So what we wanted to do is kind of demystify the issue of where do you get access to capital, right? So, we got a lot of opportunity to first educate on how to build a small business. But then once your business gets to a certain level, then, some folks might start looking for other ways to grow their business. So that may be equity investments, that may be debt investment. And Bank of America is trying to help solve that by providing those 2 resources with just access to capital. So this is even outside of the PE VC firms that we support and that we invest in to say, hey, these are places that you can go to try to find that access.
Okay. All right. Well, no, that's really good to know. So you can Google it and it's right there and it's accessible. And we'll certainly dig into that for our listeners and get that information out. We appreciate you sharing that. There was something also about $2 billion in equality, progress, sustainability bonds. Do you know much about that, or will we have to talk about that a little offline a little bit later? I won't put you on the spot, but as these things come up, they kind of come into my mind. So any details on that at all?
Yeah, so just kind of high level, those types of bonds are offered to companies that are looking to progress on those issues. And what I'll say is this is an innovative path for Bank of America to provide a type of financing. The other I would also call out, and this one is more local here, is that we've recently announced a Neighborhood Builders Award that is specifically targeted to racial inequities. And Nathaniel Spence, who is the executive director over Partnership for Southern Equity, was a recipient of that award. Mm-hmm. So this is just another example of what we're doing to try to help solve for, issues that are related to sustainability. So you're going to start to hear a lot more, if you're not already hear a lot about climate change and how climate change and things that are happening can also disproportionately impact our communities. And what are we doing about that? So Nathaniel's a great partner in that work. Him and I have recently had an opportunity to sit down and go through some discussion points around what his organization is doing and how he's looking to solve for it. But this is an area that I'll say probably doesn't get as much airplay. But the truth is that it's an area that is very important. And once again, Bank of America is looking at innovative ways to kind of help solve for some of those challenges.
Gotcha. And then also you're the managing director of the Diverse Segments Business Division. Well, what exactly is the role of that group, of that division?
So this is something new that not just Bank of America, but all institutions understand and realize is that as we continue to see greater and greater wealth building in minority communities and communities of color and communities of different gender, it becomes incumbent upon organizations to take an internal look and say, what do we do to make sure that we can capture that opportunity? And whether that's looking at how we go to market, how we do business, what the products and services that we offer, or even the people that we have that represents our organization as we, thinking about diversifying our workforce. These are all issues and concerns for us that we want to make sure we stay on the cutting edge of understanding those demographic changes and being at the forefront to say, hey, we should be the bank of choice for these particular communities. So in my role, it's a national strategy executive role, effectively taking a look at what we're doing right now and how we can be more effective across all of our markets with capturing that opportunity. And so that's my quote unquote, what I like to call my day job. And it gives me great pleasure to do it because, as I mentioned earlier in the call, I've always had a great affiliation and attraction to the areas of financial wealth building. And now we start to see more and more achievement, Black African Americans, because of whether it's business or whether because of education and going off and having roles in corporate America and being executives. Those are creating opportunities now that we have to have those conversations about, not just investing, but now we got to have complex conversations around wealth planning, estate planning, and those issues that normally we may not have had those conversations within our own families, but now come in causes of concern and things that we want help with. So the question is, we want to make sure that Bank of America's position, because we are best in class, we want to make sure we're positioned to service that change in that demographic of wealth.
Yeah. No, I appreciate you bringing that up. I didn't mention this earlier, but I've done a lot over the years in financial literacy, just trying to help. Because one thing that I noticed, and I'm sure we all have noticed over time, is the lack of generational wealth. And now you're getting to the point where there are a lot of minorities that are actually excelling to higher positions in the corporate world and in the personal private sector. But is that money going to translate to the next generation? And is it going to be there? And without that education of how to manage finances, it's not going to happen. And often we start off with a handicap when we're buying our first home in our 30s, as opposed to other demographics buying it in their 20s. So we're already behind, when it comes to having equity and worth, especially since, many statistics say that 50% of your net worth is in your home. So, it's really something when you think about it. So glad you're leading that initiative and helping walk us down that road. So anything else you wanted to add to that, or?
Yeah, I think you made a good point about home equity, and what I wanted to say is within my work, I do a lot of research, and one of the most interesting trends that I've seen is that since the pandemic, Black and African American individuals have started businesses at a clip of about 30% higher than any other demographic.
Wow, I didn't know that.
And so when you think about that, what we're seeing is this groundswell of business creation and development. Now, what we all understand as institutions is that, once you start off as a sole proprietor, and Joel, I'm sure you know this, you come to a point where it's like, okay, how do you take that next step to grow? And that's where the issues of access to capital and credit and so forth come in. Yep. Because in order for us to supercharge this, we need those businesses to hire people, right? We need these businesses to grow. And so that the owners of that business build equity. On the other side of things, when you think about real estate, and I'm going to kind of go into your space here a little bit, think about the businesses that own their real estate if they have a physical footprint versus those that lease. And think about the economic outcome and power that the owners have versus those that lease, right? So as you know, when you own real estate, that then gives you the opportunity not only to participate in the realization of the growth and the value, and there's been a lot of that here recently in the economy, but it also gives you the opportunity to leverage that equity if you want to grow your business. Same way people can do this similar with their individual homes by having equity in their homes, which, and I read another statistic that 97% of millionaires have more than 2 properties, meaning that a lot of their wealth comes from real estate ownership. Now, I would also, I'm not giving financial advice here, but what I will also counsel folks to do is to take a look at equity ownership, because real estate has certain characteristics that in certain markets it doesn't do as well. Well, how do you diversify your portfolio? You also have equity ownership. And so what we also know through studies is that Black and African Americans have a lower percentage of their assets held in stocks in the stock market.
Mhm.
And the reason for that, you made this point, is a lack of education,
Lack of
a
education.
lack of understanding.
Right.
And so as you know, as we continue to be more and more interested in things like Bitcoins and so forth, I would just caution people to say, expand your horizon when it comes to education around investing. Number
Mhm.
one, get somebody that knows what they're doing to kind of advise you, but also understand the power of ownership. So whether that's ownership in stocks, ownership in homes, ownership in your business, ownership in your business real estate, all of that is what empowers. And to your point about this next generation, this legacy building,
Mhm.
that's effectively how you build that legacy, by keeping that ownership and then transition it to the next generation, and them doing the same and going to do it again and again.
Yeah, yeah, absolutely, absolutely, and that's a very valuable point because it needs to be more than just real estate. One thing that we all realize in '08 is that real estate doesn't always go up; it could go down, right?
That's right.
And then when you look at commercial properties, a lot of it is solely based on cash flow. And if someone creates builds a better building than yours across the street, then maybe your cash flow will go down. So you got to diversify your portfolio and your assets, and that's certainly something that you've been leading the charge with. I wanted to mention something also that you just was successful in the Merrill 2022 Black and African American Advisor Symposium, getting that here to Atlanta. So congratulations on that. And what's really that all about as it relates to the advisors in the symposium?
Yeah, so this is a great program that I think Merrill is best in class at. Is that really is bringing together their Black African American advisors to talk about how to give them access to how they grow their businesses, and but bring them into a forum where they all may be dealing with common issues. And have them opportunity not only just to network amongst each other, but that also share ideas and say, how do we build our brands? How do we build our companies, and getting some of the best practices from those across the country? So as you all know, Atlanta is ripe from a business development perspective. And I was interested to hear, and I think this may be about a year ago, that there is no majority race or ethnicity in Atlanta. So we're just that diverse. So it made us for a great host city. Merrill actually had an opportunity to take those advisors and spend some time at the Center for Civil and Human Rights, which is a great expedition, which is a great
Yeah, that's a great museum,
experience.
man. Yes,
Yeah, it's a great experience for folks that haven't seen it, to actually, you and
please
I,
go.
we're younger, right, Joel? So we didn't grow up in those times, but you go through that experience, and you really get to kind of sense and feeling just in a smaller space of what it might have been like for our people, in those early years when there was a lot of struggle and strife. And
Mm.
so by providing those types of experiences, highlighting those issues, but then also then saying there's opportunity, and how do we develop those opportunities, it gave me great pleasure and pride to be with that group. And so as the president of Bank of America Atlanta, I have responsibility of making sure that I lend my support to all of our lines of business, everything we do here. So whether that's on the personal side, whether it's wealth management, banking, consumer banking, or on the business side of things, where it's us dealing with our smallest businesses to our largest businesses, I'm here to make sure I support those lines of business and all they do. And as I stated, the leadership here at Merrill did a really good job putting that on, and I was happy to host.
Yeah, yeah. Well, no, fantastic. I certainly appreciate that. Generally, at this point, we do open up the lines to take a few questions. Do you have a couple of minutes for that, or how you doing on time?
Sure,
Okay, all right. Appreciate
let's
that.
do it.
You guys, if you got any questions, go ahead and put those in the chat or raise your virtual hand, and we'll get those over to Al from that standpoint. So we appreciate that. So Al, let me ask you this while we wait on those questions to come in. As president, you have to have a vision, right? One thing that I had a mentor many years ago. He happened to be a black individual, but he was with Prudential Securities, where we were handling our investment lines related to our mortgage banking operations. One thing that he always shared with me is the lower you are on the totem pole, you're really just working a job and you're being told what to do. But as you move further up, they're expecting you to be more entrepreneurial, even though you're working at a large corporation. And so, with you now serving as that presidential role, where would you like to take the bank from that standpoint, or this region that you're actually president over? So, if we were to look ahead, let's say 5 years from now, what would you like for it to look like? What would you like to see?
Well, that's a good question. So first, I would say, to the advice that one of your mentors gave you. I mean, I think there's one context to say, like, you're working your way up. But the other thing that I tell people that I mentor is that it's never too early for you to have an executive mentality. And when I say that,
Mhm.
if you come into a company, a lot of times the first thing they offer you is benefits. And they say, you can participate in the 401k. And even through that 401k, you might even have an opportunity to own some company stock, by buying it there. And if you think about that, you become an owner of the company as soon as you purchase that stock, whether it's through 401k or through a taxable account. And so I always like to tell people that it's never too early to have an ownership or an executive mentality.
Mhm.
And what that means is that if you're an owner of a company, you have every concern and right to know what's going on with that company. You want to know the company's culture. You want to understand the company's strategy and how they execute. You want to understand what the macro environment, how that's affecting the company either positively or negatively. And so for us, we have quarterly town halls every quarter, and our CEO speaks. And I encourage every associate attend those virtual meetings. Listen to the CEO. Listen to how they present and what he's or she is where he or she's looking to drive the company, and what points are important. Because they'll tell you, right? This is information that's public. This is information that they talk to with the analyst community. This is how people decide whether or not to invest in the stock. And so I said, starting early with that, even if you don't understand everything, I think creates that mentality as you do move up in the ranks. It gives you that executive level presence. So something that I did very early is I just started to look and say, hey, what's important to our company? And so when you ask where do we want to drive our business, I think for us, it's continuously driving responsible growth. And when we say responsible growth, it kind of harkens back to those days when bank earnings and our quarter to quarter results were more volatile because our business was not as balanced. So now today we have a much more balanced business. When we think about risk management is at the core of what we do, and we take on a client and we're helping our clients grow. And then overall, we look at the company from a people perspective. It's what are we doing to both take care of our colleagues and our people, right? So that's everything from our policies around minimum wage, our policies around hiring and low to moderate income areas, our policies when it comes to supporting our associates with policies such as mental health benefits that help them, them and their families, all the other benefits when it comes to 401k and the things that help them grow and be successful for themselves. And then what are we doing in our community and what impact are we having? Because we understand if we're going to do business in this community, we also have to have a care for the community and knowing that a rising tide lifts all boats. So the more we care for our communities, the more we solve for the biggest challenges in our communities, the better we will be as an organization. So for us, it's the power of the and. We can be a successful, profitable company, and we can do good in our community.
Yeah, do good while doing well as well. So that's an interesting mantra as to how you do that. Kalia did have one question here. We'll squeeze this one in. How do I locate available internships here in Atlanta at Bank of America? Are there any internships at Bank of America here in Atlanta?
We do. So we have internship cycles that typically run, and you can find this actually on our careers website, because for all of our colleges, and I'll also, for answer the question, go to your college career services, because they will also have information on the timing, but they typically start early fall when the application process, and then they run through the fall in terms of information sessions and interviews, and then we make decisions, and then those decisions are for the next summer. So right now is actually prime time to start thinking about that and looking for that information.
Okay, all right, appreciate that. Hopefully, Kalia, that answered your question. I did want to circle back on one thing that you mentioned, and you harped on this a couple of times, and I think it's very important, which is why I want to bring it up again, is minorities in the workforce putting money away into 401ks and IRAs and not just doing real estate. Why do you think that lags behind? You probably have more statistics on that than I do, but why do you think we lag behind in that? And I preface it by saying this. I remember one of my early jobs on Wall Street and not understanding these type of plans. I was like, oh man, it's probably just some trick to hold on to my money. I can invest my own money, right? And I wouldn't participate. And I didn't have anybody to educate me on that either, because like your parents, they weren't superstar executives and just didn't know. So why do you think that is, that minorities just don't participate more in the 401ks and IRAs and things of that sort? If that is the case, I mean, you might have statistics to the contrary. I don't know.
No, it is the case, unfortunately, and I think it's multifaceted. I think there are a number of reasons. I think a lot of times it comes down to education. Number one, exposure and education, I think, are the two biggest reasons, right? So if you think about why, on the flip side, as we say, minorities have a lower ownership in stocks, but they have a higher percentage of their balance sheet is actually held in real estate. And when I look at certain studies and surveys, a lot of it is because of individuals. It's hard. The stocks are intangible, right? You can't touch it. You can't drive by it and see it. You don't collect necessarily a rent from it every month. And I think that lack of tangibility is also a barrier, right? Because, like you said, people just don't understand it. I mean, if you turn on CNBC, you see a bunch of green and red numbers, right, at the bottom of the screen. But the question is, what does that really mean?
Yeah.
So I think education and exposure are two of the biggest hurdles, right? So if you look across the industry, and we're getting better, but we still have a big gap in the number of Black African American people that are out there as advisors, as people that are providing the education to that community, that has that connectivity to that community. You mentioned the Black African American Advisor Symposium. That's one of the missions. Is like, how do we continue to grow that force to educate folks that have different connectivities? And at the same time, I think I don't know if you're a parent, but it's incumbent upon us as parents that we start to have those conversations and expose our children to those topics and not hide it from them and say, oh, this is grown folks' business. It's not your business, right? But I bring my son in and I talk to him about finances, and I use a service with him of just sitting down and he sees CNBC, and I talk to him about stocks and ownerships and things that he can relate to, like Roblox. Roblox went public, I think a year or so ago, and I talked to him about that. So it's really just exposure, right? It's the lack of that exposure. But then once we get it, then we have this strong interest in it. So I've been very proud to work with a lot of individuals that had no, educational exposure in the beginning, but then after that, set them on a path, and they're doing great. So it really is that I think that piece, Joel, is the biggest part.
Yeah, I can agree with that. It's definitely about exposure, and seeing even more minorities in higher positions gives them the belief that they can actually achieve those things too. And just having them exposed to that. It was kind of one of the things even behind the podcast. It was like, hey, there's so many people out here doing things, but as a group, it seems kind of fragmented. There's a guy over here, there's a guy over there. For a long time, we were thinking that there were only three black CEOs in America. You had Stanley O'Neill and Ken Chenault and a couple of others,
right.
And that was pretty much it. But there's a lot out there, and exposure certainly is key. I wanted to talk about that also, even as it relates to life insurance. And I want to head down this path a little bit, because one thing that I noticed is that there's really two areas in life where you receive your largest chunk of capital if you're an average person. You own your home, and when you own your home, you can sell that and receive a lump sum of capital. And if someone in the family dies, you can then receive a lump sum of capital as well. As you probably know, the Rockefellers did a lot with insurance over the years in order to eventually formulate the family bank. And that's something I would love to see more families do, is create a family bank. What do you think we can do to help more minorities appreciate the importance of life insurance and other types of insurance products in there as a benefit to their families?
Well, I'll say this. You point out a kind of a prominent example here. I think not getting into the field of providing financial advice, what I will say is that in my years of working in a private bank, what I did notice was really striking and interesting to me. To your point, is that when someone died, usually in these families that had wealth, instead of everybody arguing over, who's going to get the curio cabinets and who's going to pay the funeral bill, which this is my story with my family. There was always kind of a payout, whether that was related to, insurance or related to assets that they have accumulated. And it was a lot of times in the world that I was in, it was paid through trust, right? And so I started to see certain strategies and vehicles that were designed to both build and sustain wealth through generations. And I think that's what, a larger point that you're making here around a particular product. But, it all depends on that family structure, right? Depends on the type of assets that family has and the liquidity of those assets and the levels. And what I'll just say for folks out there is just, I've heard before that people think that estate planning is only for quote unquote rich people or wealthy people. And the truth of the matter is that estate planning is for everyone, right? And people don't really understand or realize that you don't have to have millions of dollars to need an adequate estate planning. You don't have to have millions of dollars to need certain products, whether that's investments, whether that's insurance, or whatever it may be. And if you don't have, it's similar to, we don't operate on ourselves, right? For most of us that aren't in the medical field, if there's something wrong with us, we typically go see a doctor. And a lot of people that may be spiritual, if you just typically have spiritual counselors, right? Typically don't just do it on your own. I think finances is one of those areas where people have to get comfortable with seeking out advice and help, as opposed to relying on their own understanding or relying on their own intuitions when it comes to what they need and what they don't need and what's going to work and what's not going to work. And so I think we still, to your question before, I think we have a challenge there, Joel, is we have a challenge of people being ready to go out and seek that advice and say, hey, can you tell me what I need? These are my goals. This is what I'm looking to do. What products and services and ways do I need to acclimate myself in order to get there?
Yeah, Al, you bring up a good point, and to me, it's a larger issue of just the culture of the community, and not just the Black community, or a lot of communities, but the idea of in this country, it's taboo to talk about how much you have, and you really don't want people to know how much you have, and a lot of times, it's also you're presenting an image. So you might have the fancy car. So a lot of minorities, as you know, they'll buy a fancy car before they buy a house, right? At least that's the way it historically has been done. So it's always this image, and I can't go to a financial advisor because they'll know that I'm just fronting, right? So it's a sad thing, but it's a dynamic that has to change, and it's a mentality that has to be affected. To your point, humble yourself and go get the help you need in order to take yourself to the next level. So,
I have a saying, and I've worked in this field for a number of years, and what I started to see is that wealth is as much as what you can't see than what you can see.
Mm-hmm.
So if you can see it, right, and then you can see it in tangible things like houses and cars and jewelry and whatever else people may equate wealth to, it actually is the opposite. Because typically people that have wealth, you don't see their wealth. You can't quantify it by saying like how much a particular car costs, how much a particular house costs. You won't be able to discern their wealth from that. And so I just think there's a balance there that folks should understand when it comes to building wealth and building to, be able to retire comfortably and transfer wealth to your children or what have you, as opposed to just to your point about consumption.
Yeah, and I think, you look at it like a Warren Buffett is a good example of that, right? You would never know if you look at his house and his car that he's so wealthy. So very, very good point. Tamika had a question here for our tenant clients. Does B of A do business lending for build out or just purchase loans? So don't know if you know the answer to that, but if you do, please help us out.
Yeah, I think if you get Richard back, write that one down and let Richard go into the details of our financing strategy when it comes to commercial real estate, because I spent all my years in private wealth, but you have a resource through Richard that I think could speak to that pretty directly. So make sure that person that asked that question gets that answer from Richard.
Okay, all right, sounds good. And for y'all who don't know, that's Richard Slayton. Well, I'm sure everybody knows. He'll be back on the show hopefully in a few weeks. We have him scheduled. So thank you for that question, Tamika. We'll make sure you get your answer for that. Now, one other thing also does, and I believe this is taboo, but not taboo for you, but just industry wide. I just want to ask it because you can help clarify it for me. Generally, you won't have a bank recommend a particular investment, but they might recommend a particular fund to invest in. Is that correct? So, like for an example, if there's a group that's investing in real estate, like say a BlackRock, for an example, well, that's a competitor. But will Bank of America say, hey, maybe you should invest in, or let me phrase it this way. Are individuals able to talk to financial advisors about possibly having their clients invest in investments that they have related to real estate and other things that the bank doesn't directly do? I think that's a better way to put it.
Yeah, no, thank you. Yep, exactly. So just to give you a little insight on how the process works, typically when we sit down with someone, we'll assess kind of where their assets are, right? The type of assets they have. We do kind of a balance sheet review, right? So we look at assets that includes cash, investments in the stock market, real estate, direct investments, so forth. We look at loans. And so then we kind of come up with a strategy and a plan and say, okay, based on, their financial situation, we make recommendations. And typically when we build what we call a portfolio of assets, right, or recommendations, that can be accomplished. That can be everything from stocks, bonds. It can be direct on real estate. It could be indirectly on real estate through like a fund structure, as you were mentioning, commodity exposure, depending on the level of wealth. It also could be things like private equity funds and so forth. So it really depends, Joel, person to person, but what the advisor or the relationship manager or the client advisor responsibility is really to kind of sit down with that individual and say, okay, here are where your assets are. And we speak about diversification. We're big proponents of diversification. So if we see things that are uneven, if we see you have more in one asset than the other, we would recommend kind of how to rebalance that and put you in a position where you're not as susceptible to macroeconomic events, right? So you mentioned, 2008, 2009. For those folks that were overly concentrated in real estate, they were disproportionately impacted by the 2008, 2009 financial crisis. And remember our conversation before, Black African-American individuals had the larger part of their wealth in real estate. So you can imagine what that period did to wealth in the Black community for those that had real estate versus those that had financial assets, and that typically recovered faster than those that had real estate, right? And same thing could be said for the pandemic. Commercial real estate holders had a tougher time in the pandemic because businesses were shutting down. You think about restaurants, you think about people that had brick and mortar. So, you probably saw a lot of businesses go go under. And therefore, those that own those commercial real estate properties, they weren't collecting the rents. So it's really our job as advisors to go through and highlight some of those challenges and opportunities when you have concentrations, is what we call them, and say, how can you balance this out? Maybe you need more exposure to the stock market, or maybe you need less exposure to the stock market, you need more exposure to real estate. It all depends.
Okay, all right, that makes sense. Let me ask this also, does Bank of America do any LP investing, or is it just debt? Or will they become a limited partner in let's say if I was building a $300 million building, would they jump in on the equity side or just on the debt side?
So, we actually have ways. That's probably another question for Richard to get deeper into kind of how we finance both from a debt and equity perspective, right? So that's definitely something to ask him. But what I'll also say is, we talked earlier about another avenue by which we invest is we'll take a position in a PE or VC fund that may ultimately take a position in your company, right? So Bank of America may own an ownership position, and that was a part of that conversation around the $350 million that we have now across the country in various funds. And so when that fund makes a decision, maybe to go in and invest in a minority developer, let's say, well, Bank of America, by way of us having ownership in that fund, now has ownership in that development.
Gotcha. And I want to elaborate on that because that relates to real estate directly, and it's a very, very important point. You could do it if you want. How important is that for, let's say, a development company to really get rolling if they have that investment in their operating business as opposed to directly in a piece of, in a particular asset? If you want to elaborate on that, or I can do it either way.
Yeah, so I think there's two parts to that question. I'll leave the CRE question about the company and their cap structure, right? Because that's what you're asking about, the structure of their cap, whether it's on the balance sheet or in the property. But for us on the other side of the table, I think first, as I mentioned, we will invest through PE and VC funds, right? That invest. But then if we're looking at like from an underwriting perspective, right, looking at the deal, then that's where you want to really talk to someone like a Richard Slayton who can give you that insight to say, hey, if you're going to a deal, it has a certain amount of equity, it may be in the land, it may be coming to the table with cash, you need a certain level of debt, then that's where that advisory about what's the right mix of equity and debt and how to finance a deal would go. So, some of this can get very complex, as when you start getting to those bigger developments, Joel. Sometimes people can go in and you can buy a 4-unit apartment building, right? That'd be more akin to, real estate, single family financing, how it's structured. But then you start getting into these larger deals, you got debt, equity, and all these other considerations. Like I said, I don't want to speak out of school because Richard for Bank of America, for all you out that don't know, is the absolute, I would say, the expert in this field. He's been doing it for a number of years. But just know that, we do have a process for doing that. We do have a plan for that to help folks with understanding that piece.
Sure. I appreciate that. And what I wanted to mention for the listeners, in addition to what I was just saying, is that anytime you go to develop a larger deal, the question is who's going to guarantee the money, right? So you go to a Bank of America or anywhere else and you say, hey, even if it's the debt, I need $60 million in debt. Okay, well, who's going to sign on the dotted line as that guarantor to make sure that $60 million goes back or gets paid back? And what they're going to want to see is the balance sheet of the people who are sponsoring the deal. So now if you have a Bank of America who has put money into a fund and that fund invests on your balance sheet, now you can present the balance sheet and say, hey, we've got the capital here in order to back this loan. and now you're having to bring in less partners, which dilutes your equity in the deal. So it is very, very, very important if you're able to have that type of investment. In fact, I'm not going to mention any names, but there's multiple minority developers that I know of that were able to get cash infusion on their balance sheet that are now doing tremendous things because they're able now to walk into a bank and say, hey, I've got assets on my balance sheet. Yeah, let's do business. So
And so I'll say like in the personal realm, Joel, because that's where I lie, right? When we do the same thing, right? And we think about underwriting loans for someone that wants to buy a home or they want to buy art or whatever it may be, right? It's looking at the health of the balance sheet. Right. Individuals should look at themselves as companies. For every individual that if you own a W-2 income, you have an income statement, right? You have income, you have expenses, and then you have, what's left over. You also have a balance sheet. And so if you're, going back to this point about consumerism and spending, if you're not spending as much as you're earning, then you're able to add that cash to the balance sheet. Mm-hmm. So when you walk into a bank and you have cash and you have equity in properties and you're looking to secure financing, it's a different question, it's a different conversation than if you don't, right? If you're seeing that, cash flow isn't positive and you don't have any assets or any equity, there's a much different conversation. So I think just, Joel, to your point, you can kind of feather that out to just a larger conversation around just, income statements and balance sheets. And I always I'm a proponent of folks to operate yourself as a business. Even if you don't have a business, operate your own personal finances as a business would.
Yeah. Your family household should be run like a business. You hate to say that, but it's true, especially as it comes to managing assets and resources. So that's a very good point. But yeah, man, it's extremely important because a lot of people think that to get a real estate deal done, they just have to raise equity. They just have to raise the money, and then they can walk in and say, well, I got my 10%, let's go ahead and close. But that balance sheet plays a very vital part in making sure that your deal gets funded because they're going to want to know who has the deep pockets behind the deal. So having that balance sheet is very vital, sometimes even more important than having the equity, because if you can get the balance sheet taken care of, you can raise the equity, but the balance sheet could even be harder in some cases. So very powerful point. So while we're almost at the end here, I really appreciate you hanging in here with us. I'll disclose this. At first we were told, you're only going to get 15 minutes because he's so powerful and so important. But you hung in there with us. I want to say thank you, bro. We certainly appreciate it. So as we wrap up, I did want to ask you this. As someone starting out, not myself, because, I've been around for a minute, but for others because we're really trying to help the next generation of minorities take it to the next level in the real estate space. They're starting to make money. They're starting to, get things going. What would you say would be one of the first things that they need to do to really get on a sound financial footing so they don't lose the money that they're making now and they're able to build and grow on what they have? And I think I know what you're going to say, but I'm going to go ahead and let you say it anyway. So what would you say?
Well, actually, so I'll take it to where before you even think about the finance part of it, think about investing in yourself and in the knowledge that you have. And the way that you do that, it's not necessarily through formal education all the time. I mean, of course, you can go and get a degree and that kind of thing. But I think one of the most important things you can do is really find a good mentor or sponsor out there that's already doing what you're trying to do and kind of work alongside that person and let that person kind of feed you knowledge and information about whatever it is that you want to do. So if it's commercial real estate, which, Joel, as you know, there's a high barrier of entry just because financing is difficult, finding deals, the deal sizes are typically larger, right? So, I think people that are just getting started, trying to get that knowledge and invest in yourself and kind of pouring yourself into understanding what that market looks like, what that industry is, and then managing your finances and being really prudent when it comes to, first personally, because a lot of times people start out, they're using their own personal balance sheet, when they're first starting out, right? Mm-hmm. Like a beginner can't necessarily go out to the street and raise 100 million in equity for a deal all the time because you don't have a name recognition. So a lot of times, they might be starting small. They may start with a duplex. And I think I heard this from Clive, who was on your show maybe a while back, and he talked about how he started small and then scaled up. Yeah. I think people should be realistic about their goals and understanding that there's a lot of learning that goes into it, and then surround themselves with people that's going to feed them that information.
Yeah, good point. And one thing about those people feeding you information, they'll help you understand how to manage your money going forward as well. In most cases, they can kind of feed you that information as well. So we certainly appreciate that. So Al, what final words do you have for us today as we wrap up? I know you have a lot on your plate. It's Monday morning. And we certainly appreciate you carving out some time for us. But what would you like to close with today to help us understand and appreciate?
Well, first, it's just let me just first say the appreciation that I have for Joel, what you're doing, and the fact that we're bringing people together to have these conversations, because that's where it starts, right? Is that maybe someone learned something new today that they didn't know yesterday, and if we can keep doing that every single day, then we can see continual progress in the area of having people be more successful. And I just am glad and happy to have the platform to talk about both from myself, my background, and then what Bank of America is doing largely as an organization to impact the broader community, and for those people to stay on the lookout for that, and always think about us when they're going through the motions and saying, okay, how can I take the next step? And once again, it doesn't happen overnight, but I think myself and others are testaments to you just keep diligent, keep at it, keep working hard, and keep meeting people and putting yourselves in positions of discomfort sometimes where, hey, it may be a little uncomfortable, but that's where growth lies. Continuously challenge yourself and put yourself out there, and it can happen. So once again, Joe, I'm forever grateful for the opportunity. This doesn't have to be the last time. I'm always happy to come back and give an update.
Sure.
And particularly when it comes to the CRE questions, Richard, who's a good friend of mine and somebody that I is highly capable in the space, he'll be able to answer those very distinct and direct questions when it comes to a lot of the things that we do for Bank of America for supporting, minority developers and making sure that we play a role in helping all small businesses succeed in this market. So thank you again.
Yeah, absolutely. Thank you for that. Will, you were asking the question, who's Richard? Again, that's Richard Slayton. He was earlier guest on the show. He's with Bank of America. I don't remember his exact title right now. Do you know offhand, Al?
Yeah, he's our representative for a community development bank. So he is everything that development for in Atlanta, particularly around affordable housing. So low income housing, tax credits. Richard's the expert on all of that. So that's the person that you want to talk to about those types of topics.
Okay, all right, great. Yeah, so that's Richard Slayton. Again, he's been on. He'll be on again in a few weeks. So we had to cut his other taping short, but he'll be here with us, and we'll get you that information. We certainly appreciate it, Al. I do have to mention also that if you're downloading this broadcast, please like us at the bottom of wherever you get your podcast. We would certainly appreciate that. And if you're watching us on YouTube, please subscribe and leave your comments as well in the section below. So we really appreciate that as well. And Al, again, I can't say enough. And by the way, I love that wall back there. That wood design is beautiful. You did an excellent job. Whoever did that for you did a great job. So
thank you, sir.
Yeah. That's beautiful. So we appreciate that. But hey, great to have you today. Thank you so much. Give our regards to the rest of the expanded family as we're all getting to know each other here in the Atlanta market. And welcome to your new role. We're excited to have you here in Atlanta, and we know you'll represent the bank well in the city. So thank you for that.
Well, thank you, Joe, and we'll speak again soon, brother.
All right, appreciate it. So this has been the Mornings with Joel CRE podcast. Thank you again for being here with us today. Have a great afternoon. You've been listening to Mornings with Joel, commercial real estate podcast, where we focus on rising stars and established players in commercial real estate and talk to them about how they are building legacies in today's marketplace. Please check back weekly to hear our upcoming guests.